Everyone is waiting for the 2025 housing crash. But the truth is, it's already started. It just doesn't look like 2008. Right now, in late 2025, a quiet crisis is sweeping across the Sun Belt. It's called the stale inventory trap. New data shows that in states like Florida and Texas, over 60% of listings have been sitting on the market for 2 months or longer without a single offer. 3 years ago, you could sell a shack in Miami in 4 hours. Today, sellers are slamming on the brakes, but buyers simply aren't there. Why? Because this crash isn't about subprime loans. It's about 3 new triggers that nobody saw coming. The first trigger is the uninsurable crisis. In late 2025, it's not just interest rates killing deals, it's insurance premiums. In Florida alone, non-renewal rates have hit record highs. Major insurers are packing up and leaving. We are seeing reports that nearly 20% of homeowners in Miami are now skipping property insurance entirely because they simply cannot afford it. This creates a terrifying new category of seller, the forced exiter. These aren't people who want to sell. These are people who can't afford to keep their homes because their monthly insurance bill is now higher than their mortgage principal. When they flood the market, prices don't just dip, they break. Trigger number 2, the Airbnb bust. For the last 5 years, everyone and their cousin became a real estate investor. But in 2025, the party is over. The short-term rental market is largely saturated. Supply growth has slowed, but revenue per room is dropping. Cities are cracking down with bans, and travelers are exhausted by cleaning fees. Thousands of amateur investors who bought homes in 2022 expecting easy passive income are now cash flow negative. As we head into 2026, these investors are realizing their asset is actually a liability. Their exit door? Selling the house. And they all want to sell at the same time. But the biggest reason isn't investors. It's simple math. We have hit the affordability wall. Look at this stat from the National Association of Home Builders. In 2025, nearly 75% of all U.S. households cannot afford a median-priced new home. Read that again, 75%. When 3/4 of the population can't buy your product, your market is frozen. Sellers are holding out for 2022 prices, but buyers are living with 2025 wages. This stalemate can only end one way. Prices must come down to meet reality. So, is the market going to crash 20% tomorrow? Probably not. 2025 isn't a cliff. It's a slow bleed. We are looking at a liquidity crisis. You won't see prices drop overnight, but you will see homes sitting for 4 months, 6 months, maybe a year. Your equity might look high on paper, but if you can't find a buyer, that equity is a ghost. The 2025 crash is silent, it is slow, and it is local. If you're in the Sun Belt, watch your local inventory numbers closely. That is your canary in the coal mine. This is CapitalView Explained. Subscribe for next week's update.